Thanks for joining David, Kevin, and myself for the market update of the month of November. Another fantastic month, so I'm happy about that. I'm going to be passing it on to David and Kevin to give you the market update. But before I do that, I want to wish you all the very best over the holiday season. Take care, and I hope you and your family have super holidays. Bye-bye. Off to the guys.
Kevin, how did the markets perform in the month of November?
The equity markets were positive in November, which was great to see. In the US, the S&P 500 was up 5.38%. In Canada, the S&P TSX was up 5.29%. And in markets outside of North America showed positive returns as well. European indices were up mid to high single digits depending on the region. Asia Pacific was the best performing region, with the MSCI All Country Asia Pacific Index up over 12% on the month. What was moving those markets upwards in November?
A few factors. Number one, I think, was the lower inflation reading that came in November out of the Consumer Price Index in the United States. So I can't remember the exact day. It was mid to late November, but the CPI number for November was published, and it came in a bit lower than what people had expected. And the market had its best day. The S&P 500 had its best day in 2 years. So that was great to see. And it's just that's some more evidence that maybe inflation has in fact peaked and is starting to come back down more toward trend. So the markets cheered that. And then on the very last day of the month, November 30th, we had a great market day as well, and that was on the back of comments from the central bank in the United States. So Powell, Chair Powell, gave a speech, and he just talked about inflation and still wanting to hike rates because they don't want to let their foot off the gas too soon. They want to make sure that inflation well and truly is coming back down towards trend. So he did signal that rates are still going to go up a little bit probably in the States, much like the central bank here in Canada has done recently. But those rate hikes are going to be more tempered. So they're going to be smaller hikes, and they're going to continue to watch the data. And hopefully the data continues to be constructive for assets, and inflation does continue to come down in those interest rate. Hopefully we're closer towards the end of the interest rate hiking cycle than we are to the middle or beginning of it, certainly. And then finally, COVID policy in China was another big factor why the Chinese markets in particular were the best performing markets in November globally. There's hope and maybe some evidence that the Chinese government is starting to be a little bit more lenient with its what was a zero tolerance policy toward COVID. They're letting people isolate in their homes now and stuff like that. And hopefully that's going to result in, pardon me, less negative impacts to consumer spending in China and less negative impacts to shutting down manufacturing hubs in China. So there was some excitement there for markets. They're hopeful that the Chinese economy is going to start picking up again heading into next year. As always, if you have any questions, feel free to give Kevin, Harry, or myself a call, and all the best over the holidays.
Have a great day.